Hello, my dear students. Hope you guys are all doing good. Hope you guys are all perfectly fine. I hope you guys are all preparing for the examination in a very perfect manner. So one last resource from me before you go for the examination. So in this video, I'm going to take you through quickly the MTP Series 2. So whatever MTP Series 2 which has been released for the September 2024 attempt, that we will go through it quickly. So but before that, I want to give you one caution. Guys, this is such an interesting MTP. The questions in this MTP are really awesome questions. They will actually test your conceptual clarity. So my humble request, please have a look at this MTP, especially this series 2 MTP, whatever is there. Definitely have a look at that. That will tell you, that will give you a perspective how you have to understand the conceptual questions, from what perspective you have to think. There are really some tricky questions which will go to the roots of the conceptual clarity. I'm telling you that. So I will even explain this as a part of this MTP. So please do this MTP, then only you go for the examination. If you are not watching this video also, it is fine. I don't expect each and everyone to watch this video. My request will be, you try to do this MTP once on your own. If at all you are getting stuck somewhere, if at all you are not able to understand certain thing, if at all you are unable to agree with the answer given here, then only you come and watch this MTP video. But even if you don't watch this video is also fine, but still solve the MTP once, then only you go for the examination. Really some interesting questions are there, so definitely I will explain this as a part of my video, but you also try to do it on your own. So having said that, let me directly go into this MTP related discussion. So first, as usual, we will be solving case scenario based MCQs. So let us have a quick look at case scenario number 1. So what does case scenario number 1 say? Let us see. DLP and Associates, a firm of chartered accountants, are in midst of conducting audit of Twist and Spin Limited. Okay, the company is in business since the last 15 years and have appointed DPL and Associates as their auditors for the first time for a term of 5 years from the beginning from financial year 2023-24. So they spoke about the company's business and they told that they have appointed this DLP and Associates for the first time. That means it is an initial audit engagement. Next, while identifying and assessing the risk of material misstatement at the assertion level, the engagement team had assessed risk of material misstatement for revenues and trade receivables to be high. So as a part of risk assessment procedures, the auditors have decided that when it comes to areas of revenue and trade receivables, risk of material misstatement is little bit higher. Okay. The team is considering to send negative confirmation request as a sole substantive audit procedures to some business entities representing trade receivables appearing in the financial statements of the company. See, in the previous paragraph, they told that the risk of trade receivables is high. But still the team is thinking that let us send negative confirmation request for trade receivables. Do you think it is acceptable? No. See, we can use negative confirmation request as a method for obtaining audit evidence only in those areas where the risk is lower, where the amounts are small, when the populations are homogeneous. In low risky areas, we prefer to use negative confirmation request because negative confirmation request give you less persuasive evidence than the positive confirmation request. The evidence which you get from negative confirmation request is less convincing than when compared with the positive confirmation request. And in the question, clearly they have told in the area of trade receivables risk is high. You tell me, in that case, is sending negative confirmation request is an appropriate decision? 100% not. Next, the company had made sales to these business entities in January 2024. Such business entities are few and have quite large balances as on 31st of March. And to the trade receivables to whom they want to send a negative confirmation request, those balances are very, very large amounts. You tell me, where the amounts are large, then can the company rely only on negative confirmation requests? No. Then, however, team members are not on the same page regarding sending negative confirmation request. All the team members are not agreeing to this. Yes, they should not agree. They have to send a positive confirmation request here. Besides considering sending of confirmation request, engagement team has planned certain audit procedures pertaining to trade receivables. So regarding trade receivables, they have planned some other procedures also in addition to confirmation request. What are that procedures? Verification of invoice issued during last 7 days of the financial year 2023-24 to verify that goods have been dispatched by the company, basically cut off. So especially close to the balance sheet date, when the risk and reward has been transferred or not, whether the sales are genuine or not, last 7 days invoices they are verifying. Next, selection of few invoices from the aging report of the month. See, cutoff is actually also a part of completeness assertion only. So selection of few invoices from the aging report of the month of March 2024 for verification of correctness of the billed amounts to correct customers and on correct dates. Nothing but they're even taking the debtors aging report from that few debtors they have selected, and they're checking whether they're checking the invoices, whether those invoices are posted in the correct accounts or not. And even they have prepared one schedule of the movement of the bad debts, how the bad debts are moving year after year. They have even prepared a schedule of the bad debts also. And they are reviewing the process of providing discounts to ensure that it is in accordance with the company's policy. Even they are verifying, has the company given any discounts? If at all they're giving discount, is there is a policy whether they're giving discount as per the internal rules and regulations or not. Discounts also they are verifying. Next, another junior team member has observed that share options outstanding account reflected in the financial statements of the company. He started searching classification requirements of the Schedule 3 Companies Act in this regard. So one of the article assistant wants to know how this share options outstanding account should be presented. He started searching it on the Google. So what should be the presentation requirement? Share options outstanding account should be shown under reserves and surpluses as a separate line item. Share option outstanding account should be shown under what? Reserves and surpluses as a separate heading. They have to show it. This is what the disclosure requirement of share options outstanding account. Next, the engagement team wants to ensure that only the inventories held by the company have been recorded in the financial statements and do not include any inventories belonging to third parties. So whatever inventories which are belonging to the company, that only should be included in the inventory balance. Inventories which belong to the third parties should not be included in inventories balance. They are keen to verify completeness assertion for inventories. Okay. The team has planned the following procedures in this respect. So in order to verify completeness, the team wants to perform certain procedures. The details of that procedures they are giving. Comparison of inventory turnover ratio of the current period with previous years. So nothing but they want to perform one kind of analytical procedure. They want to do vertical analysis of current period with previous years. Nothing but composition of raw material. This year is how much, last year is how much. Composition of work in progress. This year how much percentage, last year how much percentage. So that vertical analysis they want to do. This is also an analytical procedure. Comparison of budgets with actuals. This is also one analytical procedure. Performing purchases and sales cutoff test. So this is not actually an analytical procedure. This is something like a test of details they are doing. So in three, they have told a few procedures. Out of that, 3 are analytical procedures. One is actually a test of detail. During the course of audit, a team member concluded that company has followed a particular accounting policy for revenue recognition during the year 2023-24. which is in accordance with the accounting standards and applicable financial reporting framework. But it was not consistently applied in the preceding period, having an impact upon opening balances of trade receivables. So consistency of accounting policies is not there. One of the fundamental accounting assumption got violated. R is confused regarding the possible implications on the auditor's report. So how this will have an impact on the auditor's report, one of the engagement team member is confused. So depending on these facts, we are required to answer a few MCQs. Let us have a look at the questions now. Question number 1. The engagement team members are not able to take a decision on sending negative confirmation request to some entities which are described in the case scenario. Which of the following statement is in accordance with standard on audit? First of all, which standard on audit deal with external confirmation? SA 505. So as we have already discussed in the case scenario, the risk is high, amounts are large. Is it suitable for them to rely only on negative confirmation request? No. Let us see. It would be appropriate for the engagement team to send negative confirmation request. No. It would be inappropriate for the engagement team to send negative confirmation request to these business entities. Yes, this is a correct one. You should not send negative confirmation request. You have to send a positive confirmation request there. Sending negative confirmation request depends upon auditor's professional judgment, and standards on audit do not spell out any confirmation request in this aspect. No, standards on auditing has given guidance. It is not completely on the auditor's choice. Business entities are more likely to respond in case of disagreement. Therefore, sending negative confirmation request always provides better qualitative evidence. No, sending positive confirmation request will always provide qualitative evidence. So that's why option B is the correct option. Next. Which of the planned audit procedures pertaining to trade receivables described in the case scenario is not related to verification of completeness assertion? So regarding trade receivables, they have given certain audit procedures. No, out of those audit procedures, which one is not related to completeness? Which one is not related to completeness assertion? That we have to find out. Verification of invoices during the last 7 days. So this is actually cutoff procedure. Cutoff is actually part of completeness only. Yes, first item is related to completeness. Selecting a few invoices from the aging report and checking their correctness. This is also completeness. Preparing the schedule of the movement of the bad debts, you are checking whether bad debts figure is correct or not. So by preparing the movement of the bad debts, you are not trying to verify completeness, you are actually trying to verify the valuation assertion. You are actually trying to verify valuation assertion, not completeness assertion. Reviewing the process of discounts, so whether discounts given, whether discounts are genuine or not, whether discounts are really given or fake discounts, that you are verifying. This is also relating to completeness assertion only. So which assertion is not related to value, which assertion is not related to completeness, which procedure is not related to completeness? Third procedure, which is actually related to valuation. Understood? So that is what the correct answer. 3 only. 3 is not related to completeness because it is related to valuation. Next one, third one. Guide team member is by selecting the correct option with respect to share options outstanding account. So as they have told in the question itself, one of the engagement team member is searching for the purpose of what should be the appropriate presentation for share options outstanding account. As I've already told you, it should be shown under reserves and surpluses with a separate heading. It is required to be classified under current liabilities? Definitely not. It is required to be classified under shareholder funds, under share capital. Further, it is to be classified separately under paid up share capital. No. It is required to be classified under shareholders funds, under reserves and surpluses. Further, it is to be classified separately as such under reserves and surpluses. Yes, this is the correct one. It is required to be classified under shareholder funds, under reserves and surpluses. However, it has to be shown as a part of capital reserve. No, it should not be shown as a capital reserve. It should be included as a part of reserves and surpluses. So even if we cross verify with the answer also, third MCQ answer is C. Next one. Which of the planned audit procedure in relation to inventories described in the case scenario is not in the nature of analytical procedure? This we have already written in the case scenario itself. So which is not related to, which is not an analytical procedure? This one, last step is not an analytical procedure. So fourth point is not actually related to analytical procedure. Understood everybody? So this is a case scenario number 1. Little bit easier, not so complicated, easy one. Let us now have a look at case scenario number 2. Let's try to understand what are the facts of this case. CAJ is nearing completion of audit of Cheap Cost Private Limited, a manufacturing company for the financial year 2023-24. In the name itself, cheap cost is there. So whatever, CAJ is nearing completing the audit of Cheap Cost Private Limited, a manufacturing company for the which financial year 2023-24. The draft financial statements of the company show a profit before tax of 5 crore rupees. Okay, they have told profit before tax, PBT is 5 crores. Materiality for the financial statements as a whole has been determined at the rate of 5% of profit before taxes. So they have determined percentage as 5% and benchmark they are taking it as profit before taxes. So if you multiply that, materiality level set by the management is, how much it will come? I think 25 lakhs. So 25 lakhs is a materiality level which has been determined by auditor. At the end of June 2024, he is considering the following issues of flagged during the course of audit which remain uncorrected. So during the after conducting the audit, he found some misstatements. Those misstatements are not actually corrected in the financial statements. That means there were uncorrected misstatements in the financial statements. So what we should do, we have to analyze all that uncorrected misstatements, and we need to check whether that uncorrected misstatements has exceeded the materiality level or is it within the materiality level. If the uncorrected misstatements has exceeded the materiality level, then we have to modify our opinion. Yes or no? So let us see what are that uncorrected misstatements. A fire took place in one of the premises of the company on 1st of May 2024, resulting in damages to all the inventories lying there amounting to 1 crore. So because of fire accident, 1 crore worth of stock has been damaged. The inventories of affected premises are insured with Quick Bima Limited for 50 lakh rupees, and the company has also lodged a claim which is still to be settled. See, you have to pay attention to one fact here. Fire accident taken place on 1st of May 2024. And the audit is being conducted for the financial year 23-24. So this is the event which has happened after the balance sheet date. And as we know, this is a subsequent event. There will be two kinds of events: adjusting events, non-adjusting events. You tell me, if the fire accident has taken place after the balance sheet date, is it an adjusting event or non-adjusting event? It is not conforming to any condition existing as on the balance sheet date. It will be a non-adjusting event, but what the management has to do about it? So this event has to be disclosed in the notes to accounts. They need not adjust that loss in the financial statements, but they have to disclose it as a part of their notes to accounts. So there is a subsequent event which is non-adjusting in nature. It doesn't require adjustment to the financial statements, but it requires a disclosure by way of notes to accounts. Next. The company has debited 10 lakh rupees under machinery account, whereas expenditure relates to normal wear and tear of the high-speed automated machinery, the amount has been wrongly capitalized under machinery account. So they have wrongly capitalized revenue expenditure as capital expenditure. They should have treated this 10 lakh rupees of expenditure as revenue expenditure. They should have charged it to the statement of P&L, but instead of charging it to the statement of P&L, they have capitalized it. So this is clearly a misstatement. 10 lakhs worth of misstatement is there. Next, the company has not properly accounted for necessary elements of cost in arriving at work in progress. Further, estimates regarding various stages of production have not been properly made. So when it comes to work in progress, for the purpose of valuation, we need to determine what is the stage of completion of that work in progress. For example, if the work in progress is only 20% complete, then we have to allocate only 20% of the cost. So for determining value of the work in progress, the most important thing is we need to determine what is the stages of completion of the work in progress. But here he has found that there is no proper determination of stages of completion of work in progress. All such factors have resulted in the overstatement of work in progress inventories by 20 lakhs. So because of that wrong determination of percentage of completion, there was a misstatement in the inventories amounting to how much? 20 lakh rupees. See, in the machinery expenses, there is already 10 lakhs worth of misstatement, and in case of this inventories also 20 lakhs worth of misstatement is there. What is the cumulative value of the misstatement? So 10 plus 20, there is 30 lakhs worth of misstatement. What is the materiality level decided by the auditor? 25 lakh rupees of materiality level has been decided by the auditor, but there is a misstatement amounting cumulative misstatement of 30 lakh rupees. So the uncorrected misstatement has exceeded my materiality level. I have to do what? I have to modify my opinion here. Clear? Next. No other issues except as stated above merit attention. Besides, written representation letter has also been obtained on matters concerning management's responsibilities regarding fulfillment of their responsibilities for the preparation of financial statements and providing all information to CAJ. Even auditor has obtained written representations also as per SA 580. However, written representation provided to CAJ begins in the below stated manner. So when it comes to the wording of the written representation, this is how the wording of the written representation is. This representation letter is provided in connection with your audit of the financial statements of Cheap Cost Private Limited for the year ended 31st of March 2024 for the purpose of expressing an opinion as to whether financial statements give a true and fair view in accordance with applicable accounting standards in India. We confirm that to the best of our knowledge and belief, having made such inquiries as we considered necessary for the purpose of appropriately informing blah blah blah, after that remaining information is there. Is the wording of written representation correct here? Obviously. So whatever wording management has used in the written representation, yes, that wording is correct. So they are clearly telling we confirm that, but to the best of knowledge whatever we have, and after making such inquiries as required, so we are confirming to you like this. So this is what the wording used in written representation. In fact, that wording is also required to be used as per SA 580 also. So here the wording used in the written representation is obviously fine. There is no problem regarding that. Next one. Based on the above, answer the following questions. So depending on the above facts, they're asking us a few questions. Let us try to answer them. Which of the following statements is most appropriate as regards the fire incident? So we spoke about fire incident, no? So what should be the appropriate treatment for that fire accident? So it has to be disclosed by way of notes to accounts. The auditor should ask management to adjust financial statements for period under audit and book a loss of 50 lakh, not required. The auditor should ask the management to adjust financial statements for period under audit and book a loss, not required. The auditor should ask the management to disclose it in the notes to accounts. Yes, this is the correct option. This is what you are supposed to do. So fifth one, option is C. Okay. Next. Identify the correct option regarding materiality of the uncorrected misstatements relating to wrong capitalization under machinery account and overstatement of inventories. So this also we have already analyzed. Cumulatively, the misstatement amount is 30 lakh rupees, which has exceeded my materiality level. What auditor should do? He should modify. So uncorrected misstatements are not material. No, they are material. The uncorrected misstatements are material in the context of audit of the financial statements as a whole, and their effect on opinion should be considered by the auditor. Yes, he should consider modifying the opinion. Third option, the uncorrected misstatements are not material. No, they are material. The uncorrected misstatements are material in the context of audit of financial statements as a whole, and the auditor should correct this. No, he has no responsibility to correct it. If the management did not correct the misstatements, it is your responsibility to modify. You don't have any responsibility to go and correct that misstatements in the books of accounts. That is management's responsibilities. So correct option will be option B. So let us cross verify with the key. Option is B. Next one. The auditor has performed certain audit procedures described in case of scenario relating to inventories of work in progress. So auditor has performed certain procedures regarding work in progress. No, what procedures he has performed? He determined, he tried to obtain audit evidence regarding stages of completion of work in progress. That procedure he has performed. Such procedures are related to verification of which assertion. So when you are determining what is the stage of completion for the work in progress, what exact assertion you are trying to verify? Why? Because by determining percentage of completion, you will be able to know what cost should be allocated and how much value work in progress should be shown it. So that means by checking that percentage of completion of the work in progress, we are actually trying to obtain evidence regarding valuation assertion. Which assertion, guys? Valuation assertion we are trying to obtain audit evidence. So let us cross verify with the key. Yes, seventh one is also B. Next one. Which of the following statements is correct in respect of manner of providing written representation? Management has provided written representation. No? Is there any mistake in that wording? There is no mistake in the wording. That wording is proper. The extract of written representation provided in the case scenario is proper. 100% it is correct. What is that telling? The use of words having made such inquiries not permitted. No, the management can say after making all the inquiries, we are giving you this confirmation. The use of words to the best of our knowledge and belief is not permitted. No, it is permitted. The use of both kind of words having made such inquiries and to the best of our knowledge and belief is not permitted. No, both are permitted. Clear? So the terminology used is very much proper. Right. Eighth one is also A. Next one. So with this, we are done with the two case scenarios. Let us now understand case scenario number 3. MPM and Associates, a chartered accountants, have received offer letter from PST Bank for carrying out statutory audit of their Chandigarh branch for the financial year 2023-24. This offer letter inter alia requests audit firm to give an undertaking in writing that firm is not disqualified under section 143 subsection 3 clause D subclause 2 of the Companies Act 2013. That means bank is asking auditor to give a written confirmation regarding disqualification. Sir, what is the disqualification given under 141 subsection 3 clause D subclause 2? Such provision relates to disqualification of a auditor as auditor of a company if he, his relative or partner is indebted to the company subject to certain prescribed conditions. So basically 141 subsection 3 clause subclause 2 says if either you as a chartered accountant or your partner or your relative, if you are indebted to the company or any of its group companies for an amount exceeding 5 lakh rupees, you will be disqualified. So even the bank is also asking from the auditor, sir, please give me a written confirmation that neither yourself nor your relative nor your partner, none of you have been indebted to us. Give me a written confirmation. Why? Because if you are indebted to the client for which you are doing the audit, that will be a self-interest threat. So in order to protect the independence, the bank has asked the auditor to give a written confirmation that neither them nor their relative nor their partner have been indebted to the bank, so that they are independent. They are not having any kind of self-interest threat. Next one. Before accepting the said audit, the firm checks out whether it complies with the law requirements. However, there is a difference of opinion among the firm personnel whether such an undertaking can be given in case of audit of banks or not. Yes, it can be given. So after the auditor has verified whether myself or my relative or my partner, if any of us have been indebted to the bank, if he is satisfied none of us are indebted for an amount exceeding 5 lakh rupees, if it is complied, yes, auditor can give that confirmation to the banker also. There is nothing wrong in giving that confirmation to the bank regarding the disqualification. The offer letter also contains following declaration to be signed by the auditors in case they choose to accept the appointment. Even in the offer letter which has been given to the auditor, they asked the bank asked the auditor to sign a declaration also in which you have to confirm certain things. So what things, regarding what I have to give the declaration? We declare that we will not communicate or allow to be communicated to any person not legally entitled thereto any information relating to the affairs of the PST bank or to the affairs of the persons having any dealing with the bank, nor will be allowing any such person to inspect or have access to any books or documents belonging to or in the possession of the bank relating to the business of any person having any dealing with the bank. Basically, the banker is asking you to sign that during the course of audit, whatever information that you have gathered, you will not go and disclose it to anybody. Neither the bank's information, neither the bank's customers' information, none of the information will be shared with the third parties. Basically, they are asking you to sign the confidentiality clause. You will remain confidential. One of the basic ethical requirement, you have to be confidential. Secrecy you have to maintain as a part of your responsibility as an auditor. Sometimes you will get access to a lot of confidential information. You should not go and disclose it to anybody. You have to maintain utmost secrecy in the client's affairs. That only they are asking you to sign. So this entire paragraph is nothing but confidentiality. The banker is asking you to do a declaration regarding confidentiality. Next one. The audit firm has also received a document kit provided by statutory central auditors of a bank. It relates to scope of audit, areas of special audit consideration while performing audit, and requires audit firm to confirm certain matters like adherence to RBI master circulars for income recognition, asset classification, provisioning and adequacy of checking of books of accounts based on sample etc. to them by way of a letter. Nothing but you are appointed as a branch auditor. There will be central statutory auditor also. That central statutory auditor has asked this firm, this branch auditor, they have given some rules and regulations, they have given some guidance what and all they have to cover as a part of this branch audit. Like they told that they have to check the master circular regarding income recognition, asset classification, provision, adequacy of books of accounts. All this you have to check. Like that, instructions have been received by the branch auditor from the statutory central auditors. The document kit received also requires MPM and associates to consider adverse comments made by stock auditors of the borrowers enjoying cash credit facilities in their reports for the purpose of reporting. Central statutory auditors told to the branch auditor that the branch for which you are doing the audit, that branch might have given working capital loans. So in case of that working capital loans, as we have read in the bank audit chapter, when the funded exposure is more than 5 crores, stock audit will be mandatory. So the stock auditor will go to that borrower, verify the stock calculations, verify the drawing power calculations, and will give his report. So statutory central auditor asked the branch auditor to even verify the stock auditor's reports also to find whether any adverse opinion, whether any adverse remarks are given by stock auditors. So I hope we discussed the stock audit concept as a part of our regular sessions. So when in case if the bank has given a loan, especially like working capital loans, in those cases, when the funded exposure is more than 5 crore rupees, someone will go on behalf of the bank and do the stock audit. That auditor, we call it as stock auditor. So here the statutory central auditor asked the branch auditor to even verify that stock auditors reports also. Next, what is there? It also contains specific instructions to check foreign letters of credit issued during the year in compliance with the sanction terms for the respective borrowers and to verify income recognized in respect of foreign letters of credit. So particularly the statutory central auditor asked the branch auditor to pay more attention on foreign letters of credit. As we all know, letter of credit is non-funded advance. When the bank is giving a letter of credit, it does not involve any actual flow of funds. It is a non-funded advance. So specifically they need to verify this foreign letters of credits also. Depending on these facts, they are asking a few questions. Let us try to answer them. Which of the following statements is likely to be most appropriate regarding required undertaking in accordance with Companies Act 2013? As we have seen, the banker is asking the auditor to give undertaking, no, that they are not indebted. So can that undertaking be given or not? Yes, undertaking can be given. Undertaking in the sense nothing but a written confirmation you have to give to the bank management. Can you do that? Yes, you have to check whether you are complying with or not. In case if you are complying with that requirements of that 141 subsection 3 clause 3 subclause 2, you can go ahead and give a undertaking. No problem. The referred provision mainly addresses self-interest threat. Yes. Why? Because if you are indebted to the client, that will be a self-interest threat to independence of auditors. The auditors can give such an undertaking after verifying that it complies with such requirements. 100% he can do it. The referred provision mainly addresses self-review threat. No, it is not self-review threat. It is a self-interest threat. The referred provision mainly addresses self-interest threat to independence of the auditor. However, the auditor can't give such an undertaking. No, he can give such undertaking. There is no problem. The referred provision mainly addresses self-review threats. No, this is wrong. So the correct answer is it will address the self-interest threat and you can give that confirmation if you comply with that requirements. No problem regarding it. Next. The declaration relating to non-communication of information related to affairs of the bank is related to adherence to which fundamental principle? Not disclosing the client's information. Which fundamental principle is that? Confidentiality. Next one. MPM and associates are required to report on adverse comments made by stock auditors of the borrowers of the branch enjoying cash credit facilities. As we have seen, the statutory central auditor asked the branch auditor to even verify the stock auditor's report to check whether they are giving any adverse remarks. Which of the following statements is most appropriate in this regard? Let us see. Stock auditors make comments in their reports on the valuation of the security and calculation of the drawing power. Yes, stock auditors will give their comments on what? Regarding the security, whatever security they have offered to the bank for the purpose of loan, basically stock and debtors. So they will give their report on valuation of the security and calculation of the drawing power. Yes, that is what the scope of stock auditors. Stock auditors make comments in their reports on valuation of security only. However, no comments are made on calculation of drawing power. No, they will even comment on the drawing power also. Stock auditor make comments in their reports on valuation of security, documentation made by bank in respect of sanctioned credit facilities. No, this they will not verify. Leakage of revenue, no. Leakage of revenue, all these are responsibilities of concurrent auditor, not the stock auditor. calculation of drawing power. So they only will comment on two things, valuation of security and calculation of drawing power. This documentation, leakage of revenue, that will be verified by stat and concurrent auditors, not by the branch audit, not by the stock auditors. So this is also wrong. Stock auditor make comments in their reports on calculation of drawing power only. No, they will even give their comments on valuation of the securities also. So option A will be the correct option. Next one. So let us cross verify with the key. So which question we have read? 10, 11, no? So 10 is B, 11 is A. Yeah, 10 is B, 11 is A, 9 is A. Is it also matching with our key? Yes, 9 is also A. Fine. So let us have a look at the next question. Keeping in view matter of foreign letters of credits described in case scenario, for consider the following statements. This is something out of context. They have gone deeper into that foreign letters of credit and asked the question. Let us try to answer it. Foreign letters of credit issued by the branch is a non-funded loan. Yes, 100% correct. Branch earns interest on issuance of foreign letter of credit which is credited in the interest account. No, by giving letters of credit, bank will not collect interest. Bank will collect something in the name of fees and commission. They are not going to collect interest on letters of credit. They are not giving any loan. No, if it is a funded advance, interest will be there, but letter of credit is not a funded advance. No money is flowing out of the bank. It is just like acting as a guarantor or something. For that they will receive fees or commission. It will not collect any interest. So second statement is wrong. The bank which receives foreign letter of credit is known as beneficiary bank. Not actually. Beneficiary will be the exporter or importer, but the bank which receives the foreign letter of credit will be known as advisory bank. It will be known as advisory bank, not the beneficiary bank. There will be issuer bank, advisory bank, like that will be there. There will be nothing like beneficiary bank. So this is something out of the box they have asked it. So yeah, this is something out of context they have asked. So this information will not be there in the study material, but somewhat a little bit out of context. So out of the three given statements, which statement is only correct? Option A is only correct. Only statement 1 is correct. Foreign letter of credit issued by the bank is a non-funded loan. Clear? So with this we are done with the case scenarios. Now we have some general MCQs. Let us have a look at that as well. CAY has started planning for audit of a listed company. In this respect, he is considering all the matters relating to acceptance of the client, assessment of compliance with the ethical requirements including independence, consideration regarding the use of analytical procedures to be performed as a risk assessment procedure, and to have common understanding regarding the terms of engagement with the management. Basically, he is trying to perform preliminary engagement activities. Which of the following does not fall under preliminary engagement activities? So which activity is not falling under preliminary engagement activities, they are asking. So what will fall under preliminary engagement activities? Acceptance and continuation of client relationship, compliance with the ethical requirements, then establishing the terms of engagement, and also if permitted, communication with the terms of communicating with the previous auditor if applicable. These are the only 4 things which we call it as preliminary engagement activities. So they have told 4 things in the question here. Acceptance of the client, yes, it is a preliminary engagement activity. Compliance with the ethical requirements, yes, it is a preliminary engagement activity. Use of analytical procedures to be performed as risk assessment procedures. This is something which we do after accepting the audit. It is not falling under preliminary engagement activities. And understanding the terms of engagement, which means a drafting of the engagement letter. Yes, this will be considered as preliminary engagement activities. So which is not falling under preliminary engagement activities? C, using analytical procedures to be performed as risk assessment procedures. This doesn't fall under preliminary engagement activities. Clear? Next. A practicing chartered accountant is appointed by a company to perform certain agreed upon procedures. When you are called upon to perform agreed upon procedures, what do we call that engagement as? Related service, we call it. So a practicing chartered accountant is appointed by a company to perform certain agreed upon procedures relating to its trade payables. Such agreed upon procedures include verifying listing with the books of accounts, sending confirmation letters, and reporting factual discrepancies to the company management. Which of the following statement is correct? Number 1, the practicing CA shall perform work in accordance with standards on related services. Yes. And SA'220. No, SA'220 will not become applicable here. For maintaining quality, SQC1 will become applicable here. SA'220 will become applicable only in the case of audit, not in the case of related services. For all kinds of engagements for ensuring quality, SQC1 will be applicable. Next. The practicing CA shall perform work in accordance with the standards on related services and SQC1, 100% correct. The practicing chartered accountant shall perform work in accordance with the standards on auditing. No, it is not an audit engagement. The practicing CA shall perform work in accordance with the standards on assurance engagement. No, this is also not the correct one. So you should perform the work as per standards on related services and SQC1. Next. The audit of government expenditure is one of the major components of the government audit. In this regard, what is meant by audit against rules and orders? What do you mean by audit against rules and orders? Checking whatever expenditure the government is making, whether it is as per applicable laws and regulations or not. Option A, the expenditure is incurred with a due regard to broad and general principles of financial propriety, that is proprietary audit. This is not the one. That there is a sanction either against either general or specific accorded by competent authority. This is audit of sanctions. This is also not audit against rules and regulations. That there is a provision of funds out of which expenditure can be incurred and the same has been authorized by the competent authority. This is audit against provision of funds. That the expenditure incurred conforms to the relevant provisions of the statutory enactment and in accordance with the financial rules and regulations framed by competent authority. Yes, this is what we call it as audit against rules and orders. So the correct option is option number D. Understood? So these are the MCQs. Little bit tricky, not all. A few MCQs are little bit really tough ones. So now we'll come to the descriptive questions. Very, very interesting descriptive questions are there here. Let us try to understand them. So let us have a look at the first question. CDE Private Limited, a manufacturing company, had made investment in shares of some blue chip companies. Additionally, it has temporarily deposited some of its extra funds in the fixed deposits with a scheduled bank. So they have invested their money in the shares and also they have made a FD. Dividends from shares amounting to 1.8 lakhs net of TDS of 0.2 lakhs, which means they have received total 2 lakh rupees of TDS. In that 0.2 lakh rupees of TDS was gone and balance the company has got 1.8 lakh rupees. So 1.8 lakh rupees is net of TDS. You tell me how much income should be recognized in the books of accounts. Net income, net of TDS income should be recognized or total income before TDS should be recognized? Total income before TDS should be recognized in the books of accounts. You cannot record only 1.8 lakh rupees as income. You have to record total 2 lakh rupees as income. So 2 lakh rupees of dividend income and they have received a bank interest of 2.7 lakhs net of TDS. TDS amount is 0.3 lakhs. So company received 2.7 lakhs net of TDS. TDS is 0.3. Total 3 lakh rupees of TDS they have received. So how much should be recognized in the books of accounts? 3 lakhs should be recognized. So 2 lakh rupees of dividend should be recognized. 3 lakh rupees of interest should be recognized. Next. So 1.8 and 2.7 were created in the bank account of the company. During the year 2023-24, it has also sold some shares, resulting in net gain of 5 lakh rupees. They have also made some income from sale of shares and the net gain from sale of shares is 5 lakh rupees. The company has shown above incomes under the head other income for consolidated amount of 9.5 lakhs in the statement of P&L. So in the statement of their P&L, they have shown these three kinds of income as other income, but they have shown the total figure of other income as 9.5. They should not do that. Yes, total is 9.5. Sorry, not total is 9.5. Total income, how much they have received? 2 lakh rupees on 2 lakh rupees as dividend, 3 lakh rupees as interest, 5 lakh rupees as profit on shares, profit and loss on shares. So totally they should have shown other income as 10 lakh rupees. That to this bifurcation should be given. Dividend income 2 lakhs, 3 lakh rupees of interest income, 5 lakh rupees on gain of sale of shares. So they should have shown total income of 10 lakhs. But what this company has done is they have shown only 9.5 lakhs. How come they have shown 9.5 lakhs? They have recognized interest income and bank income net of TDS. So they have recognized only 1.8 lakhs as dividend income, 2.7 as interest income, 5 lakhs as shares. That's how they got 9.5, which is wrong figure. They should have recognized 10 lakh rupees as other income, and that too they should have shown separately. Next. No other information is furnished in the financial statements put up for audit. As the auditor of the company discussed whether the above situation constitutes a misstatements in the financial statements, 100% yes. There is a mistake in the disclosure. There is a mistake in the calculation of the income also. Other income should have been 10 lakh rupees and that income also should not be shown in a consolidated manner. It should have been shown as separately. So is it a misstatement? Yes, it is a misstatement. And also state few examples of the misstatements. So here you have to write what is the meaning of the term misstatement. So we have discussed this meaning of the term misstatement in our fundamentals chapter itself. So you have to write the meaning of the misstatement. Then you have to elaborate that in the given situation, there is a misstatement. So if you see here, they have elaborated the answer. In the given situation, there is a difference in amount to be recorded as well as disclosure in the financial statement item from what is required in accordance with applicable financial reporting framework. The company should have recorded gross amount of dividend and interest amounting to 2 and 3 lakh rupees respectively in the financial statements. Therefore, amount recorded in other income should have been 10 lakh rupees And not just that, they should have shown separately how much is interest income, how much is dividend income, and how much is net gain on sale of investments. And in the question, they're also asking one more thing, give a few examples of the misstatements. So they have even given a few examples of the misstatements, like charging of capital expenditure to revenue, giving a wrong disclosure than applicable financial reporting framework, applying inappropriate accounting policies, making wrong accounting estimates, intentional booking of fake expenses, fictitious expenses booking, overstating of the receivables, overstating or understating of inventories. Like that, numerous examples you can write. They're asking you to write few examples of the misstatement, so you can write any few examples. Clear? Now, so let us look at the next question. During the audit of company, CSZ is using a software to select samples pertaining to sales records of the company. While performing this process, a window opens in the software prompting the user to enter certain information. CSZ is in the process of entering information in this regard as given under. That means auditor is using some sample for some softwares for the purpose of selection of sample. To do that sampling in the software, he has to enter some information. What information he has to enter? Selection interval. What is the selection interval that you have to enter? Number of records to select, starting record, ending record, file name. What is the file name? Sales is the file name. So in the file of sales, you need to select sample. For the purpose of selection of sample, they have given this data. So you just imagine what kind of sampling method is getting used here. What kind of sampling method is used here? I told you various sampling methods: random sampling, interval sampling or systematic sampling. Then we have seen block sampling. Then also we have seen haphazard sampling and value weighted selection or monetary unit sampling. So the moment you find this term selection interval, sampling interval, which sampling it is? Interval sampling. So what happens in the interval sampling? We will divide size of the population with the required sample size. The resulting figure n, you get it as sampling interval. Every nth unit we are going to select in our sample. That we call it as what? Interval sampling. So you tell me by from this data what sampling method he is using? Interval sampling he is using. So going through the above fields, which method of sampling is likely being used in the software? So what is getting used? Interval sampling is getting used. Discuss. So you have to elaborate that interval sampling. Which foremost consideration should be kept in mind by auditor for selecting samples in such a way? So, sorry, as I have explained when I'm explaining the concept of this interval sampling, see, generally interval sampling will be not that effective. Why? Because generally items are arranged in one order. Generally items are arranged in one sequence. So when there's a proper structure, and when someone knows that you are going to use a systematic sampling, the client might arrange the records in such a way that every nth item will be a genuine item. So that's why you have to take certain precautions. Like if you see here they will try to say, so when using this method, when using this interval sampling, the auditor would need to determine that sampling units within the population are not structured in such a way that the sampling interval corresponds with particular pattern. If the clients come to know that you are following a particular pattern, they will make all the arrangements to make sure that in that pattern only genuine information is there. So that's why you should make sure that the client doesn't know the pattern and he has structured the data in such manner. That precaution you have to take. Additionally, partner of CSZ suggested him to select the first 200 sales invoices from the sales book of the last month. Here, which method is used? One more auditor suggested you select first 200 invoices as a sample. This is what method of sampling? This is a block sampling, where you are not selecting separate items. A block of a series of continuous items you are picking. That method we call it as what? Block sampling. So many questions are there in this main question. In this sub question, in one single question, there are more so many sub questions. So first they are asking systematic sampling and interval sampling. They are asking you to elaborate that. And when using this interval sampling, what precautions you have to take. Then they told one more approach. In that also they are asking you identify what method of sampling it is. Understood? Next. Truthful Products Private Limited is engaged in trading stationery items. During the year 2023-24, there was a huge fire in one storage location of the company, resulting in loss of inventories amounting to 5 crore. So during there was a fire accident, 5 crores worth of stock was damaged. As a result, the operations of the company were badly affected for about 2 months. So because of that fire accident, 2 months of sales were affected. Unfortunately, the insurance claim of the company was rejected due to certain defects in the policy issued, and loss was booked by the company year 2023-24 itself. So the company was unable to get the compensation. So they have booked this 5 crore rupees of loss. There was no change in the nature of the business of the company in relation to the last year. The draft financial statements of the company reflect following information. In the last year, the revenue was 80, net profit before taxes was 6. In the current year, revenue from operations was 100 and net profit before taxes was 10. Do you find something suspicious here? Do you find something suspicious? So in the question, they have told that there was a fire accident. And for 2 months, the operations were not run effectively, but still revenue of the company has gone up. And in addition to that, they have booked 5 crore rupees of loss. Even after booking 5 crore rupees of loss, also company's profit has gone up. You might say, sir, they might have changed business, they might have done something extra, but in the question, they have clearly told there was this sentence. There was no change in nature of business. They did not do any new business also. So don't you think something is suspicious? This is a situation of possible fraud or not. Might be the client might have overstated revenue. When there was a fire accident, for 2 months, there was no operation. There is no change in the nature of the business. The revenue should have come down. But to my surprise, the revenue has gone up. This is a situation of possible fraud. And profit has also gone up even after booking 5 crore rupees of loss. So don't you think here you have to remain alert? Don't you think you have to remain professional? You have to maintain the professional skepticism. Don't you think immediately questioning mind should come to you? Definitely that questioning mind should come. So don't you think you need to perform more procedures in the current year when it comes to revenue and profits? Yes. Why? Because there is something I'm suspecting wrong here. Then what they have told, CAD, who has been the statutory auditor for the past 3 years, has decided to rely upon same test of details as performed in the previous years. Engagement partner is telling, okay, even after having these many red flags also, but still engagement partner feels that whatever audit procedures they have followed in the previous year, the same kind of audit procedures they want to follow it in the current year. Do you think it is correct? No. Since there is a suspicion here, you need to increase your nature, timing, and extent of the audit procedures. You have to go for bigger sample sizes. You have to do an in-depth verification. You have to maintain professional skepticism. You can't simply perform whatever audit procedures that you have performed in the last year. Here, there is a suspicion. Something is wrong here. In the given situation, what is lacking on the part of the auditor? What is lacking? Professional skepticism. He is lacking. He is not remaining alert to unusual circumstances. He is not maintaining a questioning mind. But this will not strike your mind in the examination. This is very tricky question. I am telling you, I do expect that 90% of the questions will not even have that suspicion. Okay, here the answer which I have to write is professional skepticism. For 90% of the students, it might not strike. It is a very, very tricky question. That's why I told you to refer to this RTP specifically. I am very much confident for 90% of the students, they will not have this suspicion. Some students even might go and write the concepts from ethics also. They will say here the professional competence is not there. He did not provide competent services to the client. That also they might write, which to some extent I believe that is also, and that could also be an appropriate answer. But as you have looked in the suggested answers, they spoke about professional skepticism. So professional skepticism was lacking here. So I will read it for the sake of your convenience. Maintaining professional skepticism throughout the audit is necessary if auditor is to reduce risk of overlooking unusual circumstances and using inappropriate assumptions in determining nature, timing, and extent of audit procedures. So professional skepticism is very, very important. In the given situation, revenue from operations of the company have increased from 80 to 100, despite its operation being affected by the fire for about 2 months. Further, despite loss of inventories to the tune of 5 crore rupees, financial statements reflect increase in the net profit. A net profit before tax from 7.5% to 10%. Thus, approach of CAD lacks professional skepticism. In spite of these unusual circumstances, the auditor has decided to rely upon same test of details as performed in the previous years. The nature and extent of audit procedures need to be suitably altered considering changed circumstances. He may include substantive analytical procedures to analyze variations and seek necessary explanations from management. He should perform much more in-depth audit procedures. In case of doubt about reliability of information and indications of possible fraud, standards on audit require the auditor to determine what modifications or additions to the audit procedures are necessary to resolve the matter. In case if you find any suspicious transactions, you need to perform more audit procedures. CAD, the auditor of a listed company, shall document the overall audit strategy, the audit plan, and significant changes made during the audit engagement to overall audit strategy and audit plan and the reasons thereof. Why this has come? Did they ask anything about audit plan? No, they did not ask anything about audit plan. Okay, still they have told it. Okay, if at all you are making changes to your audit procedures, you have to make changes to the necessary audit. You have to make necessary changes to audit strategy and plan also. No, that is the implied thing, that sentence they have added in the answer. Clear? Next, second question. Assurance engagement means an engagement in which practitioner expresses a conclusion designed to enhance the degree of confidence of intended users other than responsible party About the outcome of evaluation or measurement of a subject matter against criteria. This is the question from nature, objective, and scope of audit. We have understood in a very detailed manner the nature of what is assurance engagement, what are the elements of assurance engagement. So they have given definition of assurance engagement. In this context, give 3 examples of assurance engagements highlighting difference in nature of assurance provided by such engagement. So they're asking you to do different kinds of assurance engagement. As we all know, audit one kind of assurance engagement in which we will give reasonable assurance. Review is another kind of engagement where we will give moderate assurance. We also verify prospective financial information, that is also one kind of assurance engagement where we will verify the projections, etc. So these 3 examples you can write it here. So same thing you'll be able to find it. They're asking you 3 examples of the assurance engagements. One is audit, other one is review. Even prospective financial information also you will verify, that is also one kind of assurance engagement. Right. Next. Pure Services Limited is into the litigation related to some legal action initiated by industry regulator. So this company is facing some legal issue. The matter has reached jurisdictional high court. Keeping in view uncertainty related to future outcome of the matter, statutory auditor of the company has decided to include in the emphasis of matter paragraph. He wants to highlight it in the emphasis of matter paragraph. Briefly discuss considerations to be taken care of by the auditor when emphasis of matter paragraph is used. So what considerations you have to keep in mind when you want to make use of emphasis of matter paragraph from SA 706. Like it says, you have to add a separate paragraph emphasis of matter, separate heading has to be given. In that you have to highlight which matter you are bringing it to the shareholders' attention. Give a reference to the note number also where they can go and find in a in-depth manner. So these are the considerations you have to keep in mind, so that you have to write. And also they are asking you to write any 2 examples of the circumstances where the auditor may consider it necessary to include an emphasis of matter paragraph. If you open this material in SA 706, there will be a list of some 5-6 examples like material uncertainty or any catastrophe. So write a few examples also. They're asking only you to write 2 examples. So you can better write 3-4 also, it is fine. But just don't write only 1 example. So there is nothing much to discuss here. It is a straightforward question, easy question. Next one. CA, statutory auditor of a company, is in the process of determining materiality for the financial statements while planning audit. Since materiality is a matter of professional judgment and it is affected by auditor's perception of the financial information needs of users of the financial statements, he is reasonably making certain assumptions about users of the financial statements, which reasonable matters are likely to be assumed by him. Once again, a straightforward question. When the auditor is determining materiality, yes, that will be determined on the basis of purely his professional judgment. But while deciding materiality, he will make some assumptions. What assumptions he will make? He will make assumptions like those who are reading the financial statements, those users of the financial statements who are there, they have a reasonable knowledge. They have reasonable knowledge about the business and economic activities, and also they have reasonable knowledge of accounting, and they are willing to study the information in the financial statements. That assumption he will make, and accordingly he will determine materiality. One more assumption, he will assume that the users understand the financial statements are presented according to levels of materiality. He will also make an assumption that users know the fact that financial statements are audited on the basis of materiality levels. And he can also make an assumption that users recognize uncertainties inherent in the measurement of amounts based on the users of estimates, judgments. And also he will make an assumption that the users will know that these financial statements are prepared on the basis of estimates. There will be some estimates also in the financial statements which involve uncertainties. And also he will assume users make reasonable economic decisions on the basis of information available. So auditor generally keeps these assumptions in mind and accordingly decide the materiality levels. Clear? Next. So this is what regarding question number 2. So let us now proceed with question number 3. 3A we will discuss now. During the course of statutory branch audit of a nationalized bank, CA Amrish is performing audit procedures in relation to the advances. He has verified the selected sample of the borrower accounts representing advances and found nothing unusual. In a banking environment, there exist documentary evidences containing observations or comments on advances which can be useful to the statutory branch auditor in performing an effective audit. List out few such documentary evidences which can be made use of by CA Amrish. See, here the answer is very simple, but understanding the question is very, very difficult. This is also one such a typical question where 90% of the students will not be able to understand what exactly they are asking for. So what they're actually trying to say here is, so while conducting branch audit, the branch auditor did not find anything unusual in the advances, but still he can verify various other documents to find whether any adverse things regarding advances are there or not. See, first he will perform audit procedures on his own. And in addition to that, he can also verify some other documents to find whether there are any negative remarks regarding advances. What are that documents which auditor can verify? What are that other documents which auditor can verify to know whether there is something wrong in the advances? Nothing but, if you remember, whether there will be a question in our material which is talking about overview of the entire bank audit. In that one last paragraph will be there are various other reports which auditors can verify to find whether any negative comments are there regarding the advances. What are that various other reports which can be verified by the auditor? He can verify previous year's audit report, latest internal inspection reports from bank officials, RBI inspection report, concurrent or internal auditors report, report on verification of security, any other internal reports related to accounts, or manager's charge handing over report when incumbent is changed. So nothing but these are all various internal reports which will be available, internal documents which will be available, which can be verified by the auditor, in order to know whether there is any negative remark regarding advances. But see here, they have made the question very much complex in saying there will be some documentary evidences where observations will be there. See, instead of documentary evidences, if they would have told there could be certain reports which contains various observations or comments regarding advances, it will immediately strike your mind. But instead of using the term reports, they have used a phrase documentary evidences, which will create a lot of confusion. So this is also one such question which will actually test your conceptual clarity. So in order to develop these interpretation skills, that's why we ask you to do the MTPs. Not that same questions will get repeated, but you will get to know how the questions will be tested, from where they can test, and how they can change the entire perspective of the question by using different phrases. Clear? Next one. While auditing financial statements of Bro Traders LLP, CAL is carefully going through LLP agreement. Briefly discuss the key points CAL should pay attention in LLP agreement and reporting responsibilities of CAL concerning the financial statements of Bro Traders. This is a question from audit of various entities. Simply, they are asking you to write about audit of LLP. When you read the LLP deed, what specific things you will verify? So what specific things we'll verify? Like we'll try to verify nature of the business and what should be the capital contributed, whether they are entitled for interest, duration of partnership, what drawings are allowed. So all these things we'll read the LLP agreement and find it out. Along with that, what are the responsibilities of auditors of LLP? They have to report whether records of the firm are correct and reliable, whether he has obtained all information and explanation, whether any restriction was imposed on him. So straight away question from audit of various entities. Next. CAN statutory auditor of Rock Limited is in the process of final assembly of the audit file. Under what circumstances a statutory auditor can make changes to the audit documentation during final assembly process of audit file? Give a few examples of such changes. Nothing but what changes can be made to the audit documentation when assembly of audit file is happening. Like we can make administrative changes like deleting duplicate documents, giving references to the working papers. That administrative changes we can do now. So that from that assembly of the audit file, that paragraph you have to write. So you can make changes which are administrative in nature, like deleting or discarding superseded documents, nothing but duplicate documents, sorting, arranging all the data in one order, signing off the checklist, and documenting evidences that the auditor has obtained, discussed and agreed with the relevant members of the engagement team. So only these administrative changes will happen. No major changes will be there. Clear? Next. Fourth question. CAJ is appointed as statutory auditor of Sigma and Beta Limited for the financial year 23-24. During the audit, he observed trade receivables amounting to 50 crore rupees are reflected in the financial statements of the company. He wants to obtain sufficient and appropriate audit evidence to conclude that trade receivables have been valued properly. Suggest a few audit procedures. Once again, a question from audit of items of the financial statements. They are asking you how you can verify valuation of the trade receivables. So open the audit of items of the financial statements, go to the trade receivables question. In that also how to verify valuation. A few points will be there. You have to write it. Straight away question. Next. While planning the audit of Me Limited, CAM has planned the nature, timing and extent of risk assessment procedures to identify and assess risk of material misstatement. So he performed risk assessment procedures. How risk should be assessed by the auditor? CAM. How he has to assess the risk? By performing risk assessment procedures, by understanding the entity, environment and its internal control. It is also well known that assessment of risk is a matter of professional judgment. It is not a matter capable of precise measurement. It is the matter capable of only professional judgment. Which specific matters are not included in audit risk? What is not included in audit risk? When you are giving a modified opinion, when unmodified is appropriate, that will not come in audit risk. Even it also does not include business risk faced by the auditor. So that paragraph you have to write. Additionally, CAK, one of the team members of the CAM, is of the view that materiality and audit risk are only considered at the planning stage of the audit. No, it has to be considered at the planning stage of the audit, at the performance of the audit, and even at the conclusion of the audit. comment. See, in one single question, they have asked so many things. So you have to write about the meaning of audit risk and how you have to write a definition of risk assessment procedures. You need to write that the assessment of risk is a matter capable of professional judgment. You also should write what is not included in the audit risk. In addition to that, you should also add one paragraph. Materiality and audit risk will be considered throughout the audit, at the planning stage, at the performing stage, and even at the conclusion stage, not just only at planning. Right? So read the answer. It will be straightforward answer. Next. CAD is planning an audit of listed company. List a specific documentation requirements in accordance with SA 300 in relation to planning such an audit. How such planning documentation is useful? Nothing but what things you will try to document regarding the planning. Like you will document overall audit strategy, audit plan, what changes were made to the audit strategy and audit plan, and reasons for that changes also you will document, and how planning documentation will be useful. If you document your audit plan and strategy, tomorrow if anyone makes an allegation, you can prove it with the help of your audit documentation. And it is also key record of planning decisions. It is also a key record of what discussions were taken place at the planning stage. So he will ultimately get benefited by conducting a proper audit. So nothing but this is question from audit strategy, planning and program. There will be a question regarding documentation of audit strategy and plan. So that answer you have to write. Next. Section 143 subsection 1 of the Companies Act 2013 states that every auditor of a company shall have access to the books of accounts and vouchers of the company and shall be entitled to require from officers of the company such information and explanation as considered necessary. And he has to inquire into certain matters. As per section 143 subsection 1, the auditor is required to inquire certain matters. What are such matters? There are 6 matters, no? Loans and advances, transactions represented merely by book entries, whether shares are sold at a price less than purchase price, loans and advances shown as a deposit, personal expenses charged to revenue, whether if shares have been issued for cash, whether cash has actually been collected or not. So that's 6 points you are supposed to write. For writing that 6 points, 5 marks you are going to get there. Next, Veer and Associates is appointed as auditors of KMP Limited. During the audit, auditor wants to verify the trade payables and liability balances that were supposed to be recorded have been recognized in the financial statements. Nothing but completeness. So whatever liabilities and trade payables are there, which should have come in the books accounts, have actually came or not. Whatever liabilities that are to be recorded, whether completely all that are recorded or not, you need to verify. That means as an auditor, you are trying to obtain evidence regarding completeness assertion. Which assertion auditor wants to ensure? Completeness. And what audit procedure should be followed by him? In the area of trade payables, how you will verify the completeness assertion? Once again, a question from audit of items of the financial statements. Open that trade payables question. There you will find how to verify completeness. So you have to write that few points. Clear? Next. CAM, auditor of a company, has planned to use substantive analytical procedures during the course of audit. In this regard, he has decided to use such procedures in the following areas. For testing relationship between sales and cost of sales, as we know that analytical procedures will be more suitable when there is predictability in the data. You tell me, can we perform analytical procedures between sales and cost of sales? Yes. Why? Because they have a close relationship. One item is on the basis of one item, we can predict another item. Like if the sales are increasing, definitely cost of sales also will go up. Since there is a predictability between the two items, is it suitable for us to perform analytical procedures in this area? Yes. And also, auditor wants to perform analytical procedures for testing rights over certain assets forming part of account balances. That means auditor wants to perform analytical procedures to verify rights. For example, what do they mean by that is, in the balance sheet, there is one asset called land and building. The auditor wants to verify whether the company is a true owner. Rights means what? Ownership, no? The auditor wants to verify whether company is a true owner of that land and building or not. You tell me, for knowing ownership, can we perform analytical procedures? No. We can perform analytical procedures for completeness assertion, valuation assertion. Yes, for that we can perform. But to know the ownership, we can't study relationships and find out whether company is owner or not. There we have to go and do the inspection. There we have to check the title documents. So analytical procedures can't be performed for assertions like rights. We can perform analytical procedures for completeness, valuation, measurement. There we can perform. But for verifying rights, to verify the ownership, analytical procedures will not be suitable. There we need to perform inspection. So in first area, he can perform analytical procedures. But in the second step, analytical procedures will not be suitable. Next, 6A. Mr. Vayu is appointed as auditor of Prism Limited for the year 2023-24. He wants to ensure that PPE has been valued appropriately and as per generally accepted accounting principles and practices, and also that Prism Limited has valid legal ownership rights over the PPE claimed to be held by the company and recorded in the financial statements. Explain how the auditor will verify the same. Once again, question from audit of items of financial statements. They're asking two questions. They're asking about how PPE will be verified regarding valuation assertion, whether PPE are shown at correct amount or not, how you can verify valuation assertion. At the same time, they're also asking you to verify rights, how we can verify rights for PPE. So once again, from audit of items of the financial statements, a straightforward question, 5 marks. So you have to open that PPE question. You have to write about verification of valuation assertion, verification of rights assertion. See here, straightforward questions from audit of items of the financial statements. 15 marks they have tested till now. One question is regarding trade receivables, one question is regarding trade payables, now it is regarding PPE. So that's why I always say audit of items of the financial statements, audit of various entities, you should not leave these chapters. Many students have that intention of leaving out these 2 chapters. You should not do it, because major marks will come from these 2 chapters. I have prepared the summary notes and it is there in my website and app. Download that, take the help of it and go through that 2 chapters. Don't miss it out. In this MTP alone, 15 marks are there till now. Next. TP & Co, a firm of chartered accountants, has been conducting audit of KSR Limited since the last 4 years. KSR Limited has diversified their business into newer areas during the last year. Okay. The senior member of the audit team handed over standard audit program of earlier years to the audit assistants and instructed them to follow the same. So whatever last year's audit program is there, the same has been given to audit assistants. But in the question, they are clearly telling the company has diversified. It has entered into new areas of business. You tell me, when the company has entered into new areas of business when compared with the last year, will still last year's audit program will be suitable now? No. So they have to make changes to the audit program. And also the assistants are conducting the audit accordingly. Even the assistants are also blindly following whatever they have been told. Do you think it is correct approach? No. So in the audit program, as we have seen, the article assistant, that is, the assistant should have an open mind. If they find any new area which was not covered in the audit program, they have to come and inform the seniors and make the changes. If they find any area which is no longer relevant from the last year, they have to inform their engagement partner and get that area deleted from the books of accounts. They have to keep an open mind. So always they have to always they have to bring their analytical skills also while doing the audit. So you have to write about that mindset of the assistants. So like if I quickly take you through that, where is it? Yes, see here. So to start with, an auditor having regard to so the auditor having regard to nature, size and composition of the business and dependability of the internal controls and given scope of work, he should frame a program which should aim at providing a minimum essential work, which may be termed as standard program. As experience is gained by actually carrying out the work, the program has to be altered to take care of the situations which were left out originally. So initially we'll develop one standard program. If at all any changes are required during the course of audit, we have to make that changes. Similarly, if any work originally provided for proves beyond doubt to be unnecessary, it may be dropped. If you find any work which is included in the audit program but it is unnecessary now, you have to drop it. The assistants engaged in the job should be encouraged to keep an open mind beyond the program given to him. He should be instructed to note and report significant matters coming to his notice to his seniors or to the partners or proprietors of the firm engaged for doing the audit. Basically, they have to keep an open mind. Next question. As per SEP 560, when after the date of auditor's report, but before the date the financial statements are issued, a fact become known to the auditor that had it been known to the auditor at the date of auditor's report, it may have caused the auditor to amend the auditor's report. In this context, what is meant by date the financial statements are issued? Can it be later than the date of providing auditor's report? So they are asking you to write what is the definition of date of issue of the financial statements, the date on which the financial statements are made available to third parties. And also they are asking one more thing, can this be later than the date of auditor's report? Obviously. See, date of approval of financial statements can't be later than the date of auditor's report. But date of issue of financial statements will be definitely after the date of auditor's report only. Yes or no? Why? Because first financial statements will be approved. Then auditor will give the audit report. Once auditor has given audit report, then only financial statements can be made available to third parties. No. So that's why, yes, there is no problem. The date of auditor's report can be after the, date of issue of the financial statements will be definitely after the date of auditor's report only. After auditor has given the audit report, then only they can circulate it. So that's why date of issue of financial statements will be generally after the date of auditor's report only. There is no problem with that. But date of approval of the financial statements should not be later than the date of auditor's report. Financial statements should be first approved, then only auditor will give the report. After the auditor has given the report, then they will be issued to the common public. Clear? Next. CAN, statutory auditor of QST Limited, appointed for a term of 5 years, has completed audit for the first financial year ending on 31st of March 2024. In compliance with the requirements of professional standards, an audit file has been assembled. He has prepared a final audit file also. After about a period of 6 months from the date of issue of the audit report, he gets a call from CFO of the company to share complete audit file so that financial reporting of the company can be improved upon coming periods. Then CFO is calling you and telling, I want audit documentation, please give me. Is it mandatory for the statutory auditors to share the files with client? No. So here they are asking about ownership of the audit documentation. Who is the owner of audit documentation? Auditor. Is he under mandatory obligation to share the copies with others? No. It is at his discretion. If he wants, he will share the copy to anybody. If he doesn't want, he will not share it. There is no compulsion on the auditor. The audit documentation is the property, unless there is a legal or regulatory requirement. If there is a legal or regulatory requirement, you have to share the documentation. If there is no legal or regulatory requirement, it is completely up to your discretion. It is your choice. If you want to share, you will share. If you don't want to share, you will not share. There is no mandatory obligation. So what are the requirements for making audit documentation available to clients? So there is no mandatory requirement. If the auditor wants, he will share it. If the auditor doesn't want, he will not share it. So the same is told in SQC 1. We have actually read this content in SA 230 audit documentation chapter, but that ownership related point was given in SQC 1. So you have to write the reference of SQC 1 in the answer. Understood? Clear everybody? That's all. This is what regarding MTP2. So as you might have found, some questions are really troublesome. So that's why please refer the RTPs ones and go for the examination. Clear? Thank you so much, guys. Bye everybody. Take care. All the best for your exams.